Good evening and welcome back to the latest edition of the InvestTalk market analysis for the week ending September 6th, 2024. And this week I am titling the video September Brings Widely Expected Volatility. This is seasonally weak time in the market, and it's definitely bringing the heat. You can see that with this heat map here for the last week of the S&P 500. You can see Nvidia down 14% on the week. Same with Broadcom down nearly 15% there. Apple down 4, Microsoft 3, Google 7, Meta 4. There's really was there were not a lot of stocks that fared very well. Amazon was roughly flat. That was probably the best. You had Visa up a little bit, right? So Tesla up a little bit. And what you can see is consumer non-durables. That's where the strength was. Those staples and utilities. So clearly, the market is pricing in a weaker economy overall. And if we dig into the economic data here, what you can see is construction spending on Monday came in weaker than expected in negative territory. Durable goods dipped down back into negative territory month over month. The JOLTS data, the lowest level since 2021, right, continuing to plumb to new lows. Those are job openings. Continuous claims for unemployment, that did tick down. So that's kind of a positive, right? Less people on the unemployment doles. That was a bit of a positive in the labor market. But the ISM Services PMI index, 51.5, all the sub indexes, they're kind of flat from the previous month. So really not a whole lot there. But what you can see is it's growing. But remember, 50 is the baseline. 50 is not growing or shrinking. So 51.5 is slight growth here within the services space. So slow go there. Non-farm payrolls month over month that did tick up on Friday, but that was worse than expected. I think the consensus was closer to 165, came in at 142. And we have the Fed meeting coming up here in about 10 days. And, the odds are just 25 basis point cut. It's a little surprising to me. I think there's enough economic data to tell you, if you're going to kick off an easing cycle, just go for it, right? Go 50 basis points and then kind of iterate from there. Um, so I would not be shocked to see them go 50 and the market start to price that in. Obviously, they're going to signal that before the actual Fed meeting. So look for potential, signals from the Fed governors in speeches and the things they're saying in public, and that could spark a rally in the markets near term if the odds of a 50 basis point cut start to increase. Now, in general, bank credit that has ticked down a little bit over the past couple of weeks, but generally it's still positive, nicely positive, right around 3% year over year, and that is certainly supportive of the the markets, the economy in general. You have the government spending money, still growing the deficit, not as high as it has been in the previous few years, but still the deficit is growing, and we know more bank credit being issued as well as the government spending. That's just recipe for at least decent growth in the economy, and that's kind of where we're at. But you do have very restrictive monetary policy. You have very high real rates. Okay, so you have five and a quarter on the Fed funds rate, and if you have back out the roughly 3%, depending on what index you want to use, but call it 3%. That's where most of the inflation numbers are hanging around. That's a positive two and plus real rate, and that's restrictive. And so that's why I say, if the Fed wants to no longer be restrictive, you need to get to three rather quickly, right? And if you go out to say March here, the odds are getting back down into three, right? Potentially 3.5 by March. By the end of next year, it's all the way to three, right? 275 to three. And that would be a less restrictive environment. And so that's what we're expecting is the Fed to really spark off an easing cycle rather soon. So with that said, let's kick off the chart section of today's video. And, I want to get into things like the move index that was down pretty decent. The growth to value ratio that continues to roll here, right? You had a attempted rally on Thursday, and Friday just beat that right back down. And what you're seeing is the value side of the market continues to be strong. Here, utilities, okay, little probably pullback in the near term. I do think rates probably peaked in the near term. If you look at the IEF, okay, that had, this is what we call a topping tail. You have a MACD divergence here. You have very high volume, and that is typically a signal that you might get you're getting a near term top in this particular asset. Doesn't mean it can't go higher in time, but it's just a little exhausted, and this is a period where you would expect a bit of bounce, and that would probably coincide with a market bounce, right? So if we head over to the S&P here, this did try to make a new high, but it made a lower high. That is bearish, okay, in the near term, and you're seeing that fall through to the downside now. The only way it would get really bearish is if actually you drop below this level, which would be 494 on the SPY. Okay, so still a ways to go until that happens. Overall, I think we're more in a choppy period, consolidation, and very similar to what we had last summer, right? We had this controlled pullback, about 10% in the markets, and that's what you should always expect is about a 10% pullback in the markets any given part of the year. Now we haven't had that this year, so could this be the time? Would not shock me at all, right? So we're at 564. So that means we're going to get down to close to this level, right? The 505. That's kind of my target for this move. Okay. Now it could be a little higher than that. You can make a higher low from the August lows as well. There's a lot that could happen here, but the main point is that this is seasonal volatility. It's unlikely to be something to really get scared about, but it's most likely a time to add some longs slowly, carefully as we get into the election season. Probably more volatility due to news there. We have debates coming up. We have polls shifting, etc. And it's going to be a contentious time, both in markets as well as societal, right? We're in a polarized time, so that's kind of where I'm expecting the market to go in the near term. Just very choppy, with much more volatility. The yen carry trade unwind. I think that's continuing. The yen is getting some strength here, so not a shock to see more volatility in the markets as the yen rallies. You have the dollar. That's rolling over in many respects. If you look at the FXE, look at euro is in an uptrend. So that overall is actually good for asset prices in general. Weaker dollar is good for asset prices. Okay. Um, what else do I want to get to? We take a look at the VIX. The VIX remains relatively bullish near term, which means most likely more volatility near term. Gold prices as well. I mean, this is just a bastion of strength. Just a sideways consolidation. Nothing really to write home about, to be honest with you. Here's the GDX. The GDX, the miners are always more volatile than gold price, but ultimately, if gold prices continue to go up, the miners are just getting cheaper and cheaper. So I think there's still a lot of opportunity in that space. Silver definitely weaker here, but still, this is generally a bull flag. Okay, you have a move up, and this is just a bullish consolidation overall. Doesn't mean it's has to break out tomorrow, but nothing really to worry about quite yet. Probably at least until you get below this 50-week moving average on the SLV. What else do I want to get to? Let's take a look at oil. Oil does continue to remain weak. Here's the USO daily chart here. Yeah, I mean, look how weak this is. The XLE, there you go. That also is very weak, but you did get some pretty good volume here. It'll be interesting to see if this holds, right? Did not make a lower low. So this could be a potential buying opportunity, especially if the market gets a bounce and the dollar remains weak. I can certainly see that happening. Um, what else do I get to? Oh, credit spreads. Let me get to that down here. So here are the credit spreads, right? So this is short-term junk, this is short-term treasuries, and what this is telling you is this isn't breaking down, right? This would be breaking down if the market and the economy was, you had a lot to worry about. Right now, you just don't at the moment. Mainly, once again, there's still inflation in the system. There's still government spending. All of that is generally supportive of asset prices, of the credit markets. And I continue to think this is another piece of evidence that this volatility is seasonal. We are in the midst of the tax season for small businesses and corporations. And so sometimes, you got to pay taxes. I need to liquidate some equities in order to pay those taxes. And so that's another reason why September is often seasonally very volatile. But that's where we're at right now. Let me go back to, let's go back to, actually, let's look at the Qs. Q. This is where really the weakness lies overall. Look at this lower high here in the MACD divergence. And that's really what's likely to drag down markets in general. Look at small caps. Small caps, much better MACD above the zero line here, and still in a general uptrend, higher highs, higher lows. So I think that you will continue to get outperformance of the small caps in the near term. Here's the small caps to the Qs. What you can see is that is an uptrend. So I think the weakness will remain with those mega cap names, and a lot of them, some of them are pretty weak. Look at Google here. That is breaking below the 50-moving average. Sorry, the 200-moving average. Meta is getting a little bit of softness. Microsoft is definitely soft. That is, look at the MACD below the zero line. I would easily say Microsoft is in a downtrend. Okay, still a good company, but it's definitely in a downtrend. So there are a lot of moving parts here to this market, but ultimately it is a choppy period, probably now, maybe even all the way to the election. And so I expect the end of the year to be positive from here, but in the near term, don't be shocked to see more volatility. So I thank you all for tuning in and liking and subscribing to this channel. And a reminder, the contents of this video are for educational purposes only and should not be construed as a recommendation to buy or sell security or to participate in investment strategy. The views are my own and do not represent those of KP Financial or those associated. Have a wonderful weekend.